East Asian is a Guernsey company that's listed on the Bermuda Stock Exchange, and investors buy shares in the company. The shares will last 5 years. They are in US dollars, and the exposure which they're getting is to the MSCI World All Markets as a proxy. So that's what they endeavour for that market to go up, in which case they will benefit. The share is structured such that after 5 years, the worst case is that the investor gets back $105 for every $100 they put in, and they can get up to $150 as a function of the performance of those markets. The most recent offering has lasted for 5 years and 2 months, and the investors have made about 35% in Aussie dollars over that period, which has been quite stellar in respect of expected market performance, what you would expect from equities. And this return was achieved with no capital risk, and was achieved in Aussie dollars, and was at a period that the rand weakened about 10% to the Aussie dollar. So the benefits to the investor are that they can access the returns of shares, which has been historically the best performing asset over the 5 years, with leverage inside the share if it's a good period of time. And because of the leverage, only needing a modest share market performance to get a very good real return. And in addition, if the markets are terrible, they get $105 out at the end of 5 years, as opposed to the minus 40 that the market would have given them. So this is a great reward for the risk you're taking. So the target markets across your high net worth clients, your institutions, hedge funds, pension funds, unit trusts, any investor that can afford the minimum, which in this case is 12,000 US dollars or some 160,000 rand, and who'd like to get exposure to equities, but only if they're good. Being a foreign listed share, the investor would need to use their annual discretionary allowance, 1 million per husband and wife or taxpayer, or the tax cleared allowance, so this is up to 10 million cleared with a receiver of revenue. Alternatively, they can use money they already have, which has been cleared in the past, which is overseas, typically earning them very low interest rates. And then lastly, they can use asset swap. So Investec Securities and other organizations provide asset swap, where they use the institutional capacity, thereby enabling a trust or company or an investor for whom those allowances are too low to then prescribe using the institution's allowance. So we have a big pool of investment advisors, and the closure date will be as soon as it's fully subscribed, or the 15th of June, whichever is the quickest.